Hey, I'm Gene Goldman. Here's a look at the week ahead for the week of July 3rd. First of all, I hope you're enjoying this holiday shortened July 4th week. I know this week lots of us are taking some time off, so it should be fairly quiet. But the financial markets are not likely to be quiet. We have a huge week of data this week. First of all, we get the ISM PMI reports for both manufacturing and services. Both should show a slight improvement from the prior month. Remember, these reports are extremely important because they're the first look at last month's economy. So these reports will give us our first look at how the economy performed in the month of June. Second of all, on Wednesday, we get the Fed meeting minutes for the last Fed meeting back on June 13th and June 14th. Should be very interesting because if we go back to that meeting, the Fed did a so-called hawkish pause where the Fed paused rates, but then they increased the level where they see rates at year end. So the minutes should offer some color around what happened behind closed doors. Yes, the pause was unanimous, but we've seen hawkish comments from Fed officials headed into the meeting and then hawkish comments from Fed officials after the meeting, all suggest that there's more than meets the eye within the meeting. Maybe the Fed was unanimous to pause, but maybe not all officials were entirely convinced. Get your popcorn ready. Wednesday, it's going to be a huge, huge report. Then on Friday, we get the big one for the week, the payroll report. So let's start with the basics. The consensus expects an increase of 215,000 jobs for last month, down from the prior month's 339,000. And then the unemployment rate should stay steady at 3.7%. So why aren't we watching this report? Well, overall, we're seeing clear signs of disinflation. You look here, for example, CPI, the Consumer Price Index, has been falling over the last 3 months, 6 months, 12 months. It's been definitely slowing down, as you see here. But if you peel back the cover and you look at the PCE report, you can see there's clear disinflation in goods, but services inflation, such as hotel services, such as food away from home, etc., all remain very elevated. Because labor is a huge part of services costs, a slowdown in services hiring is a potential sign that services inflation is potentially slowing down. We'll watch this very carefully. Overall, consumer spending is showing a little bit of signs of slowing down a bit. This could translate into services payrolls coming in a little bit lower than expectations. The key takeaway should be a very quiet week for most of us. A lot of us are taking some time off, but not for the data and not for the financial markets. We have a lot on tap this week, but we're especially watching Friday's payroll report to see if slowing services hiring is a harbinger for slowing services inflation. Thank you for listening. For more information, please follow us on Twitter at CeteraIM and see you next week.